Well, welcome. This video will be an introduction to the two trade types. And those two trade types are, probably already saw it in the title and you already know anyways, is momentum and fade. This will be an introduction. It will not be example heavy. It's mainly, we will provide quite a few examples. Maybe we'll cover a couple different charts, but it's mainly just to set the foundation of how to think about momentum and fade and why this, in all trading, 95% of trading, I think that's the only two trades there are in the Rexdog trading system. Beyond a doubt, it's the only two trades and the only way you're going to be thinking about trading, because it frames your mind and it sets you up to trade properly. Let's lay some foundation here first. What are we looking at now? If you haven't watched the momentum videos, you should watch the momentum videos, because this will factor into whether or not you're in a momentum or fade trade. So we are looking at Tesla. It is a day after the momentum videos, and we are seeing that if we would have waited, as we suggested in that video, we would have had better entries for a potential 20. So the white line is the 20 moving average, simple moving average. A lot of traders use it in their system. And then the yellow line is the Rexdog average. I do have something addition here. This is the Rexdog average with ATR bands. So this is the upper ATR. This is the lower ATR. Figured I'd introduce that. That's a public indicator. You'll see a link down that below. And that actually is going to be making it into the Rexdog system. The backtesting been doing some logic and data. There's some high probability trades around these areas. So that will be an additional trade entry that you will get in the Rexdog system here as I release it and as we put hard, fast rules around it. So let's talk about where we are in this chart right now. We're looking at the daily time frame. What is the momentum? Everybody, within 2 seconds of this video starting, if you're adopting portions of the Rexdog system, and the reason why I have the 20 on here is because I'm not going to force you to adopt the Rexdog system to learn or to get value from my videos. I'm gonna have the elements of the Rexdog system in here because that's important, but I'm also going to include other highly used indicators that correlate with the concepts, so that if you're, for whatever reason, you don't want to incorporate much of the Rexdog system, you at least can see it from a different perspective. So that's why I'm always going to typically have the Rexdog system and then an additional indicator that we can talk about the same concepts on. Where are we at in momentum on this chart? We are momentum short 1 day. Both indicators, the Rexdog and the 20. So if we go long here, if we take a long position, and we take a long position here, the trade we are at, let's say we're targeting the 20. This trade is defined on this time frame because the trade is time frame specific. It is also, and I'll get into this, it is also duration and expectation specific, not expectancy. There is a term in trading, probably most of you know, it's called expectancy. It's expectation. So if we enter this trade now, the trade that we are entering right now is a fade trade, and it's fade long. Why is it fade long? Well, the momentum of this chart is momentum short on this time frame, and we're entering on the daily time frame, and this trade, because it's against the momentum of the chart, is a fade long trade. So there's certain rules and guidelines that we would follow in being in a fade long trade. Now, the story of the chart might tell us there's a high probability that this is a good fade long trade. And there's other indicators on lower time frames that would tell us that. But we are still in a fade long trade. Here, if we would have shorted here, just to give the opposite, you probably already get it already. Let's say we would have shorted this high here. What is the momentum at this point in time when we shorted? Hopefully you're saying the momentum is momentum long momentum 1 day, because it's above all of our bias indicators. Simple rules, simple way to look at that. And what type of trade is it? Hopefully you're saying a fade trade, because it is against the momentum. Now, what would be a momentum trade? Is real simple. I'm sure I know most of you are probably getting this. At this point in time, when the momentum changed, when it went to momentum long, and let's say we entered on this close here, this candle, or we entered at the open of this day. Let's just say we did that, and then maybe we added as it trailed down. This trade, as you see it here, is quite simply on this time frame, and I'll get into the expectation here, just to kind of the introduction to the expectation. And actually, this is a good time. So if we entered this trade, so we are in momentum long. That trade is here. This trade is a momentum long trade because we are with the momentum. Our expectation of this trade, now we would have some higher targets, and let's just take simple. Our first higher target would be this middle of this gap. Now, obviously, I can look at that and say, look, I'm smart because I can see the chart. But at this point in time, let's actually go back. Let's do something magical. I don't know if this is magical, but whatever. Magical. We're here. Where is our first target? Well, in the Rexdog system, your first target is a little bit lower than that. But your eventual target, or where a high probability where you probably want to go short, a fade short, is the middle of this gap right here. It's the higher it gets up here and tests this gap. But that's just looking at the chart, and most traders would know there's a gap there, and the market loves to fill gaps. So our target would be there. That'd be our eventual target. Our pay for the trade exit would probably be right around here. That'd be our pay for the trade exit. Our second exit to solidify profit, probably be here, probably below that, probably around here. And then we'd let the rest third ride to our target. We might add, potentially, as this unfolds. As this chart looks right here, we are doing a momentum long trade. The momentum, according to our bias indicator, is long. In addition, we will drop down to lower time frames. Our expectancy of this trade, I shouldn't use expectancy, I'm sorry. Our time frame is daily, and our expectation of how long we're in this trade is 2 factors. Time. Most traders, me included, are terrible at projecting time. So you'll be kind of fast and loose with that. But then it's candles. Most traders get good at candles. And I know it seems so weird, is that, well, I'm going to be in this trade for 5 days, or 4 days, or 3 days. Or I'm going to be in this trade for 4 candles. Usually I find, myself included, my candle prediction is better than my time prediction. Don't know why that is. Maybe it's something to do with human nature. So what's our expectancy? We're momentum long in this trade. Our expectancy is 3-5 candles is our expectancy. So a lot of this depends on when you're momentum long, you're on a time frame, and it's specific to that time frame, because we could drop down to the hour time frame now. And at the hour time frame, if we look at this chart, well, we got a clear signal here just on simple signals that we should be momentum long here. And this would be a good entry at the test of the RDA and the 20. That'd be a good entry, wouldn't it? Good entry here. And if you would have entered on the close, that's probably the close. 1330, 14. Yep, that's the closing. You would have participated in this gap up. Now it would have sold off, and then you would have said, okay, well, that's great. But it did go up to our first target, did it not? So let's say that you bought the close, which could be a good strategy if your indicators are aligning like this. See, you're not arguing with the chart. Many probably people are scared of buying the close and holding overnight. And that you obviously should be mindful of that. But let me just ask you a simple question that you can't answer because we're in a video. If you're trading a system with high conviction that you created, or that maybe you, let's say the right way, you've adopted a good portion of the Rexdog trading system and you trade it with conviction because you've made it your own, and an end-of-day indicator comes down that is a high probability long, momentum long trade, should you take that trade? Well, if all your rules align, should you take that trade? Now, you might have a rule that I just don't buy half hour Any action that is half hour from the close, I just is not valid. Even if it's a rescue operation from the hidden hand of the market. We see rescue operations in the NDX and ES all the time. That's what I call it anyways. I think there's another trader. I think I borrowed that from another trader. So another YouTuber. He calls it rescue operations. So I like that phrase because I see it all the time. 30 minutes at 14:15. That's 2:15. My time. I see it all the time. Rescue operation is in effect. Now I'm trading that, but I trade it at lower size. But I see that all the time. Who knows why? I don't care. So this trade here, we're momentum long. And in the close. And our target, based on a higher time frame, would be here for the pay for the trade target. Now, where the chart currently sits, it is 1310. And the market has a couple hours to close. We are still momentum long. If you're using the 20 on the 1 hour, what are you? You've got the first signal here that it wants to go lower. So on the higher time frame, well, we're at this, I'm sorry. I went back in the chart, so we're not even actually in the actual time of the chart. But if we were looking at, we're not in real time. I should have reminded myself of that. But let's just actually go forward from here. And let's just say, okay, if you're using the 20 MA, at this point in time, you are fading because your indicator at this point in time, at this area, using simple rules, close below the 20, another close below the 20. If you go long here, that is a fade long. Now, it might be a good entry for a long because you're early, but it is a fade long. So if you go long here, you're in a fade long trade. There's no other way to define it. On the Rex Dog average, you're in a momentum long on the 1 hour because it's above it. It had some, but that's not really a good intention. This stuff, this can happen. Look, you're never exact in trading. So trading isn't exact. It's ranges. So that's a little intention. That's a little intention. So this isn't a high probability trade off this one indicator. There's other indicators we would look at to see whether or not we should take this trade. But right now on the Rex Dog system, it's momentum long. On the 20 simple moving average, we are fade long. That's our trade. We are fade long right now. Now let's just play it and see what happens. All right, both of our trades are doing good. Speed it up. Okay, we're feeling pretty smart. Of course, we already saw the chart. Hit our target, hit our second exit, hit our first pay for the trade exit, I like to call it. Actually gapped overnight, so we probably would have been in that. We probably would have just closed out here or let it ride because this momentum on a lower time frame, if you watch the momentum video, if you watch the momentum video, my hope is that you see that in this area the momentum on lower time frames switched. That is my hope. Is that if you watch the momentum videos that you saw the momentum on the lower time frame switch. So while we had a target here, maybe you had a limit entry in there and you got taken out, or down there, maybe you got taken out. My hope is that you see on the 5-minute time frame that in this area you should be momentum long. And there was no time in this day that told you, if you didn't have limit orders already in, that you should be taking a profit yet on the lower time frame. There's no time in this day. On the 1 minute, there's no time on this day that showed you that you should take. Never close below the Rex Dog average. And we probably already looked at this section of the chart. But there's no time, there's no area in this part that told you that your target wasn't on track. This would have been for most traders trading the Rex Dog system, this would have been a very relaxing trade. Once it got past that day, most traders, because they haven't solidified their mind in the right way, once it did this candle here, remember your momentum long and everything else is pointing momentum long, so you're in the right direction of the trade. Now you did start the trade on the 20 simple moving average as a fade, but now it turned over. You might even add at this point in time. especially if you're an aggressive trader and you're trading right, you would add. Why not? Are you going to argue with the chart? Are you literally going to argue with the chart? Are you going to sit here and look at this? And I'm going to do a video on this. I used to say I wasn't a breakout trader. I don't want to steal the thunder from that video. The biggest mistake I ever made in my trading, one of the biggest mistakes, is telling myself I'm not a breakout trader. I trade this every second of the day. Now, a couple years ago, I wouldn't trade it because I said I told myself I'm not a breakout trader and this is a breakout and most breakouts fail. Now, I'm going heavy here. And here, I'm going heavy again. I don't even have all the Rexdog indicators on the system on here. And I just know that there's various things telling me momentum long, momentum long, momentum long. It's not stopping. Momentum long, momentum long. Your target is right. Momentum long. It's literally screaming at, me. Momentum long, momentum long. Yeah, do you want to be cool and fade this move? You can be cool and try to fade this move. But why are you arguing with the chart? This is just simple. We have two simple moving. We have a RDA, the Rexdog average on here, and we have the 20 simple moving average. And I've just described for you what's the right way for me to say this? I've just given you a very simple trade system you could literally take right now and design around just using these two and be pretty successful if you create the right rules and you trade right. I would suggest, though, that you need a couple other things in your system, because just this alone, unless you're really good at reading price action and you're really good at entries, it can get a little, this is like showing you a perfect example in a way. It's showing you like, hey, this is like, if I woke up every day and trades like this came about, then trading would be relatively simple. It doesn't. It's kind of more like, let's go to the end of the chart. Let's go to real time. Let's go to auto. It's kind of like today. So we're on the 5 minute. Let's just look at simple rules. Need to be momentum long here. So momentum long since here, momentum long. So if you're trading long, you're momentum long. Did hit an exhaustion point. Now here, double high. Most traders are going to take that trade anyways if they short, because it's just a high probability trade. But you're fading because it's still here that high is a momentum high, but it's in the Rexdog system, it's still momentum long, but it's starting to change over. So you're fading this, but this is a fade trade in the Rexdog system. In the simple 20 moving average, you're kind of on the bubble there of whether or not it's a fade or with momentum. But there's a high probability that this high is going to fail. And what did it do? Well, here in this area, it turned any long trade you're doing in this area is a fade trade. You're fading the overall momentum on this time frame. Remember, it comes down to how long the expectation. If I go long here at this point in time, that is a fade trade. This is a fade trade. Momentum is short on this time frame. So if I go long here at this low, I'm fading it. It's a good fade trade based on what I see here. Really good fade trade. And there's no reason to get out quite yet. So good fade trade going into the close. Maybe a test of this high and beyond. But good fade trade. With your first profit target right here at the RDA and the 20, you're taking profit there, because what did it do? It ranged for a while. So you take a pay for the trade target, profit. Probably move your stop loss up here, just above your entry. Your two stop losses left. So if you did a third position where it's a third, stop loss is here. So your stop losses, so you're really like, I just put this here, your stop loss is here. And quite simply, you're just, at this point in time, just waiting. There's no reason to add yet. You could potentially add here, saying that my rules, the bias, the momentum bias is still intact. In fact, you started this trade at what? What was this trade? This trade was a fade long, because when we started this trade, the momentum was short. What was our expectation? 7 to 8 candles, maybe an hour to get to our target. Shorter than that. Maybe that was our expectation. Obviously, it's dependent on what you're trading. Now, where are we at right now? Well, there's been a little bit of a switch over in the market. If I remove this so we can see it. There's been a little bit of a switch over in the market. What's the momentum now on this time frame? Well, it's kind of on the bubble right now, but let's say there's a close up here. Let's say the candle closes up here, or even half of this. Let's say it closes half of this breakdown candle here. It closes above this. You could reasonably say, probably most systems will say, you then are momentum long. So this fade long, you started as a fade trade. You held a portion of it because you did take profit here, because it's a high probability point where it might actually turn back around. And then from there, what did you do? Well, you continued to hold. And at this point in time, if it does switch over to a momentum long, this trade does become, you're thinking it's a momentum long trade. Doesn't matter where you entered, because now the chart, the story of the chart has turned momentum long. Now, if you entered an additional position, maybe here, if it did close here, you're still momentum long. So you're still in a momentum trade and you're long. And at that point, any short that you did up here should be obvious. Any short up here, as long as these stay where they're at relative here, is a fade trade. So if you fade this high, maybe up here, you take a high probability fade, which is around this area. High probability fade based on this is around this area. Kind of in this area. If you fade this move and go short, it is a high probability fade, especially on a lower time frame like the 1 minute. Switches over, the algorithm switches over. This is a high probability fade if the algorithm on the 1 minute switches over. Now it might be switching over now. It might be just losing steam and coming down to test a lower level. We have no other data on this chart. We have no other levels. We have nothing else to really define that. But in closing, let's go to BTC USD. Because I'm going to close this with very clear rules. And we're going to go to the 1 hour time frame. I'm long BTC down here and here. So it's fade trades. But I'm expecting, I'm looking for the close to come up higher. But it is a frustrating trade to be in because we're in this range. I wouldn't be entering here because we're at the middle of a range. Terrible area. I don't like the way the 1 hour is aligning for us to talk about this. Let's go to the 4 hour. 4 hour. Using the 20 simple moving average with simple rules. If you are long right now, what trade are you in? That's right, you're momentum long. If you're in a long trade using the simple moving average, you're momentum long. If you're using the Rexdog system and this simple, the RDA, with just these simple rules, you are fade long. You're fading the overall momentum of the 4 hour. Might be a good fade trade. Probably is based on what we're seeing here. Because I don't have all the other indicators on here, but it's probably a good fade trade. That's why I'm in it. But right now, I'm well aware that I'm in a fade trade. I'm well aware that the close could come down here. We had a discussion in the den earlier on this. Could come down here and test this low here. And then just rip back up. And just bam. I'm well aware of that. And I'm actually going to providing a few things align at this point, and that happens. Even here. Here's another important area. Even here, if it rips down to there, if it rips down to here, a few things align on a lower time frame, I'm going to add to my long. And as long as the hidden hand of the market changes the algorithm for the rest of the night, I would stay in that long with the expectation that it's going to eventually try to break through what it's trying to break through right now, which is the 200. So if we put, that's one of my thesis, the simple thesis. There's another momentum indicator that it's really trying to break through. That's really important. So we could look at that, but let's just add a simple indicator. I don't want to make the video. Let's just add the moving average. And let's just add the 200. I'm not even going to change the color. I'm just going to add 200 just so we can. So it's looking, it's really wanting to bust through with momentum that 200. Here's your first clue. It wanted to do that here. This candle right here. You know, we had a really good discussion in the den today that described this and described kind of how to think about where we're at right now. So this candle here told you that it wants to go higher. It doesn't matter what happened down here, because what's happening down here right now in the current price action is exactly what you would expect based on seeing this. Everything that's happening down here and how you would define the range that it's keeping and what's important for you to watch is your expectation based on what this one candle did. It's really that simple. There's three things on this chart right here without even all the other indicators that you're watching right now to whether or not that thesis of a rip through the 200 is in the cards. There's only three things you're watching on this chart right now. And those three things are broken, then your thesis is immediately wrong. And the probability that it's right is lower, so you should get out of the long trade. There's only three things you're watching on this chart. It's really that simple. All right, so on this chart right now, if we are long, we are fade long because we are below all the momentum. If we are short, for whatever reason, your highest probability shorts is actually up here. But if we're short for whatever reason, we are with the momentum. Might not be the best entry right here, but you're with the momentum. That's how you would describe it. That's how you would think about it. That's how you would approach the trade. That's how you would manage the trade. So it's really that simple. So I turned what probably should have been a 10 to 15 minute video into a 27-minute video. So I'd like to congratulate myself for that. I'm saying that tongue in cheek. But hopefully, if you're at this point in the video, you do find value in everything I covered. Definitely you can share a comment below and you can troll me all you want. So I look forward to seeing you in the next video. We'll move on to probably a trade entry video. So we'll talk about specific trade entries. So I'm looking forward to that. Look forward to seeing you in the next video.